How's it going, my good old friends of YouTube? It's Stas here. Welcome back to another video. So you guys know what we're going to do today. We're going to break down the stock market. We're going to talk about stocks, earnings, my thoughts on the markets, whether or not I believe today's rally was legit. Do I think it's a bull trap? We're going to talk about a bunch. And let me tell you, the markets had a pretty solid day today. We had the S&P up 1.5%. We had the Russell up, get this guys, 2.7%. We had the NASDAQ up 0.7%. As the Dow went up a whopping 1.8%. So we have to break it down. So sit back, relax, hit the like button, subscribe, check out my Patreon down below if you want all my moves in the markets. And you guys could also get 50 free bucks and 2 stocks free. Link down below as well. So let's get into it. What we saw today, again, was a nice rally, and I would categorize this as a relief rally because if you guys remember, yesterday was a complete bloodbath in the stock market. SPY went just in the middle of the day, or during the day rather. It went from 464 to 449. We're talking about a 3.2% intraday down move yesterday on SPY. And don't even get me started on Triple Q, guys. Triple Q just yesterday, intraday, from top to bottom, it went down about 3.5%. And we had the Russell, get this, the Russell intraday yesterday went down almost 5%. So what we saw today, again, was simply a relief rally. And quite honestly, based on these charts for the Russell, probably the Dow as well, let's pop the Dow up, definitely for SPY and Triple Q, literally all of these charts, guys, on the 10-day, 30-minute, it seems like it could very well be a bull trap because on all of these charts, we've rallied up to moving averages where we've gotten rejected at over the past couple of days. I mean, look at the Dow here. We've rallied up to the 50 moving average countless of times over the past couple of days during the sell-off, and we've gotten rejected every time, and we've pushed for lower lows every single time after. You guys see that on the Dow. You guys see that on SPY, right? We're right by the critical 180 moving average here on the 10-day. You can see it on Triple Q. We're right by the 180 moving average, and you can see it on the Russell. So for me, I am not jumping up and down, clapping, screaming hooray that this rally is, us getting out of the woods, because it's not. By the looks of it, this could very well be a bull trap. So overall, yes, we had a great day. Volatility was down. The VIX went down 10%. We had gold, the safe haven asset. It also went down 0.8%. Silver went up a little bit, but it's a little bit more risky, silver is, than gold. But overall, it was a great day, but I'm not buying the rally quite yet. And honestly, I'd be surprised, or I wouldn't be surprised, if we had a bloody Friday tomorrow. And I'm not trying to freak you guys out. I'm just keeping it real, right? We keep it real here on this YouTube channel, guys. Always will and always do, right? So what do you think? Let me know down below in the comments. That's kind of what I'm seeing. I mean, nothing really has changed from what we talked about in my video from earlier today. So make sure to leave me a comment. Let me know your thoughts. And make sure to hit the like button if you haven't done so already. It really helps me out in the YouTube algorithm. And also make sure to subscribe and hit that notification bell if you guys haven't done so already. So now let's talk about some stocks, many of which I think 5 of these reported earnings. 3 or 4 of them reported after hours. So we have to talk about those first. Number 1 being Docusign. Oh my goodness, guys. Holy crap. This is insane. Live reaction. By the way, if you guys didn't know, when I talk about earnings, I like to get the live reaction on video. You're getting it right now. This is tanking. Docusign closed at 230, and right now, this is insane. It's trading at 170. It is down $60 per share. I don't even want to know what percentage that is or how many percentage points that is. It is down almost 30% after market hours. Talk about a falling knife. We just hit a low on this 4-hour chart. We took out the lows from the middle of May, which were at about 185. So this is getting very bloody. I don't even want to look at the earnings. I'm actually scared. I'm scared for the Docusign shareholders out there to look at these earnings, but we're going to do it anyway. EPS came in at 58 cents versus 46 cents estimated. So that beat. Revenue, 545.46 mil versus 530 mil. So double beat. And what that's telling me is, okay, the double beat, the stock's still crashing. What that's telling me is guidance has to be abysmal. It's got to be abysmal. Yeah, it's under. Yep, there it is. Q4 2021 revenue guidance, they expect 557 to 563 mil versus 573 mil. So for the next quarter, that's under the estimate for guidance. And they see full year 22 revenue of 2.08 bill versus 2.089 bill versus 2.09 bill estimated. So the revenue guidance for 22 is pretty much in line with the estimate, maybe a little bit under, but for the next quarter, Q4, it's not that great. So, I mean, it might be an overreaction. Honestly, the earnings were not that abysmal from what I'm seeing here, just briefly glancing at the numbers. It wasn't like they missed everywhere and it was just terrible. But what also, this might also be telling me, look, Stas, hey, this stock might have already priced in earnings that were better than what just came out, and it really just disappointed the shareholders. That's kind of, at the end of the day, what could be happening. And again, we're at a low on this 4-hour chart, and on the yearly chart, now it seems like we're starting to go down to, wow, are we at a year low as well? Yeah, I mean, we might be at a yearly low on Docusign. So now that it's trading under this point, we're getting, and by this point I mean 180, the support from May. Now that we're getting to these levels, we're now at levels that we haven't been at since the beginning of the collapse back in March of 2020. If you guys take a look here, this stock did go to about $70, $60 at the low in March, and then it started rallying up to 130, 40, 50, 60, which is where we're trading now. And that was in May, June of 2020. So we're trading at a multi-month low. We're almost at a year and a half low, roughly. We're actually at a year and a half low right now. So Docusign, I'd be careful. Maybe we could get a relief rally play, but I would not touch this thing until it found support, until it consolidated, cooled off a bit, and who the heck knows when that's going to happen. So Docusign is not looking good, but one that is looking good, because I already looked at these earnings. They came out this morning. Kroger, ticker symbol KR, they went up 11% today. Kroger's now taking out a multi-week high. We actually broke that 43.44 resistance today, which has been a sticking point since the end of October, early November. And let's see the earnings, because I did look at them, but I don't remember exactly what they did. They did 78 cents EPS versus 66 cents estimated, so they beat EPS. Sales came in at $31.9 billion versus $31.23 billion estimated, so double beat for the past quarter, and they see 2021 adjusted EPS between 340 to 350, it seems like, and they raised their full year 21 guidance. Actually, no, that's what they did. They raised their full year 21 adjusted EPS guidance to 340 to 350. And do we have any revenue guidance here? Let's see here. Kroger Q3 sales, that's way above the estimate. Okay, so it seems like we're running up on double beats. Guidance is looking good. I'm not necessarily seeing a same-store sales number here. Let me see if I can find it. I'm not really seeing it overall. But let's be honest, guys. It might not matter, because the trend is looking incredible nonetheless on the earnings that we're already seeing. I guess same-store sales, it's not listed there, which it does matter, don't get me wrong, but if the stock's breaking out, hey, same-store sales must have been good, right? Or at least decent. So, look, KR is breaking out. It is a little overbought. I would like to see it consolidate, maybe cool off a little bit between 43, 44, 45. And ultimately, I think, am I Mike Tyson, guys? Do I have a lisp? No. Not knocking anybody that has a lisp, but I just said when I meant to say C. I could see it getting to $48, maybe $49 per share, which was the recent high from, when was that? August, September. So keep your eyes on Kroger. I like it. Ulta, let's pop it up. Ulta reported today. I did not see their earnings, so let's see what they ended up doing. Okay, look at this. So the stock closed at 383. It went up almost 4% on the day. Now it's trading at 403. So it's up $20 after hours as of now, which is solid. And the trend, if I just clear the set really quickly, and let's see what we got here. It looks like we have an ascending triangle on Ulta. You guys can see it's been uptrending pretty much for months at this point, many months, and we've been getting stuck at about 420, 415, 420. We got rejected there back in August, back in the middle of October, also in the middle of November. So I think ultimately, technically speaking here, if Ulta breaks out of 420, which we almost did right now after hours, but we didn't. But if we do end up doing that in the near term, this might go ballistic. We could see the next leg up coming, so I'm going to set my alert at 420. At that point, we could be gunning for 450, very possible. And I almost forgot. Let's look at the earnings, guys. What the heck did they do? They did Q3 EPS. Wow, that's a big beat. $3.94 versus $2.43 estimated. So they crushed EPS. Revenue came in at $2 billion on the dot versus $1.88 billion estimated. So they crushed EPS, crushed revenue. They see full year 21 comparable store sales up 36 to 37%, guys. That is insane. But realize the numbers are a little bit skewed considering we just got out of a lockdown year. In 2020, well, not the whole year. Part of the year was a lockdown, so it makes sense. They are seeing ridiculous comparable store sales growth, which is great. And let's see here. They raised their full year 21 EPS guidance. Did they do that to sales? They raised the sales guidance as well. Take a look at that, guys. For full year 21, they originally had it at 8.1, 8.3 bill. Now they changed it to 8.5 to 8.6 bill. So very solid, guys. Very solid for Ulta here. And again, if we break that 420 point, this might be going off to the races. Let's look at Marvel, MRVL. They also reported today the stock hit a high recently of $76. Now it's trading, oh my goodness, it's trading at 71. It closed at 71. Oh, look at that. Jeez. And now it's at 86. You can't make this stuff up, guys. This just went berserk. Look at this. The stock's up 20%, roughly, a little bit less, 18, 19, 20% in the after hours right now, which is just ridiculous. So let's pop it up here. Live news tab. Let's see what's going on. They did EPS of 43 cents versus 38 cents estimated, so they beat that. Sales came in at 1.21 versus 1.15 bill, so they double beat. And they see, let's see, did they raise their guidance? Oh, yes, they did, guys. I don't know if they raised their guidance, but their guidance is ahead of what the analysts are expecting, which is just as good, in my opinion, as raising the guidance. 45 cents to 51 cents is what they're seeing for the next quarter versus 42 cents estimated. And they see sales of 1.32 bill plus or minus 3% versus 1.21 bill estimated. So double beat. EPS guidance and sales guidance is up. So this stock's going bananas. I mean, what else can I say? It's up 20% roughly, and I would not FOMO into this, no doubt about it. I'm not going to FOMO into it, but if we do see a cool off, this could be one worth touching, grabbing, whatever the heck you want to say. It might be if it cools off a bit because the momentum is clearly there. Now, let's talk about SWBI, which is Smith & Wesson. And you guys know what this company does. I don't think we could talk about it here on YouTube because, well, I don't know if many of you or all of you guys know what Smith & Wesson is, but go look it up. You do that on your own time. We can't talk about it here because we might get demonetized. You guys know how YouTube is these days about certain topics. But yeah, Smith & Wesson. I mean, they a lot of these companies like Smith & Wesson, they were in heavy demand the past 2 years. They still are, right? They still are. And this particular stock today closed at $22.90 and went up 1.8% on the day. And now it's trading down after hours. It's down to $20 per share. So it's down almost $3 after hours. And for a $22 stock, that's a pretty big move. So it's down about 15% after market hours, a little bit less, 13%. So let's see what they did. I mean, maybe the demand is not there. Maybe I'm wrong. Let's see what they ended up doing here. Oh, wow, they double missed. That's not good. Q2 EPS came in at $1.13 versus $1.32. That missed. Sales came in at $240.48 million versus $267 million. So they ended up double missing there. And they maintained their quarterly dividend. That's good. It would have been very bad if they cut the dividend. You never want to see that. And I'm not really seeing anything on guidance here, but overall it says Smith & Wesson shares are trading lower after the company reported worse than expected Q2 EPS and sales results. That's pretty much it. Clear cut, simple. They missed. So at this point in time, they went from uptrending, right? They've been slowly uptrending since September. They broke above the moving averages early November. So they went from doing that. We saw a golden cross as well, to now downtrending again. We took the moving averages out. We broke a low. We're at a multi-month low at this point. We haven't been in the low. Well, now we're under 20. So we haven't been under 20 since June. So now we're at a 6-month low pretty much on Smith & Wesson. So let's pull back the layers a bit. Yearly chart still looks decent, guys. I'm not even going to lie to you. Yearly chart looks decent. 3-year chart looks decent as well. So I think if this holds maybe 18, 19, and this overall trend here on this yearly chart, maybe we could get some sort of relief rally. But the thing that worries me is they double missed, and in the short term, hey, that might cause more pain over the next couple of days, weeks. So that means I'm going to give it some time, let the dust settle, and then we'll see what happens from there. Let's talk about Nike, NKE. Nike did pretty well today, up 2%. It closed at 170 on the dot, and I'm noticing a bullish divergence forming the past couple of days here as we're now trading within this wedge and above the key support level, the 180 SMA on this 4-hour chart. So I'm going to set my alert at 171 on Nike. If this point breaks, we end up taking the wedge out. This might see a leg up, especially if the overall markets do end up reversing. Again, like we talked about in the beginning of the video, we're still at a potential bull trap right now. But let's say if SPY does break 462, 465, we start getting out of these moving averages. At that point in time, that's where Nike, other large caps as well, they could end up bouncing back in a large way. So keep your eyes on Nike. And the last one is SoFi, ticker symbol SOFI. And did I not say this, not to toot my own horn, but did I not say SoFi was most likely going to go lower? I made a video on it about a week ago. I think, when was that? A week, maybe 10 days ago, where I talked about the lockup period. I think that was on November 24th. So that was probably about a week and a half ago. Yeah, it was. And that's when the stock was trading at like $18.50. I told you guys 16% of the shares are, the lockup period's expiring on 16% of the shares, something like that. And, now that the market has been seeing volatility, selling, it seems like maybe some of those people are dumping their shares after the lockup, and the overall market in general is taking the stock down, which is great. So at this point, it's slowly approaching my buy zone. I got my buy zone pegged between 14 on the lower end. I would love to get it at 13, but I don't know if it will get there, 13 being the lows for mid-August. I got my buy zone from 13 to 14 lower end, higher end at about 15.50. So now that we're at 16.50, we're almost there. If this gets a little bit lower, if it starts filling that gap down just a little bit, SoFi is going to be one that I want to add back into because I did own it. I sold it, made money. Now I'm looking for a re-entry. So overall, guys, that's pretty much it. Docusign, Kroger, Ulta, Marvel, SWBI, Nike, and SoFi. What are your thoughts? Let me know down below in the comments. Make sure to hit the like button as well while you're at it, and subscribe. And feel free to check out my Patreon if you guys want all my buy, sells, call outs, morning update videos, all that good stuff. Literally everything I'm doing is on Patreon, and you get more access to me throughout the day. That's linked down below. Make sure to also get 50 free bucks from M1 Finance and 2 stocks from Webull up to $1,600. All of those are also linked down below. And with that being said, I'll catch you guys in the next video. I'll pop one up here. I'll see you there. Thanks for watching. Keep crushing the markets. Stay safe out there. Peace out, guys.